Are we live? I think we're live. Good morning, everybody. Welcome to the morning show on Stock Market TV. Spencer Israel here. I've got JC Perez. I've got Steve Straza. We got a lot going on today. We're talking, let's see, Walmart earnings, Alibaba earnings, software stocks. We have like 1,500 charts, not really, but we have a lot of charts we want to share with you. Got a great slate of guests today. We've got Howard Lindzon joining the show at 9 a.m. He is, of course, the founder and managing partner at Social Leverage. He is the co-founder of StockSwitch. He's also an early investor in places like Robinhood and Koifin and eToro. So he'll come on the show to talk tech with us in about a half hour from now. We'll be joined by Kimi Sokoloff, our resident professional day trader, at 9:15, and Sean McLaughlin from All Star Options at 9:45. So great slate today. Lot to get to. Do I got a thumbs up from Straza? Thumbs up from JC? I think I do. I think we're good to go. Let's roll that intro. Hello.
Hey, we are back. How about that? We're not canceled yet.
Not yet.
Not yet. We're back for show number 2. How you doing? Miami up 1-0, by the way, in the Eastern Conference Finals. For those of you keeping score at home.
Nice comeback, huh?
The better team won.
You think so, huh?
Spencer's the big basketball junkie. Spencer, am I wrong? Come on. Looking good.
I only caught the fourth quarter last night, but yeah.
Man, you missed the fireworks in the third quarter.
I know. I'm aware because when I turned it on, they were talking about it. So what are you gonna do?
All right, let's get into it.
All right, let's get into it. State of the markets. I know JC's got some stuff. Let's see what we got going on here.
So Spencer Israel asked me earlier today, JC, you got some charts for state of the market? I'm like, do I have charts for state of the market? Who are you talking to? Do I have charts for the state of the market? You bet I do. So here's what I'm thinking. So I'm looking for sector rotation here. You know, we're seeing new highs in technology relative to the S&P 500 to the point where people who are terrible at math have convinced themselves that technology and growth is the only thing working. And it's only 5 stocks that are holding up the market. And we have the data. We know that it's not 5 stocks, right? Far from it. It's hundreds of them. And I also want to point out a couple of things. First of all, just because technology and growth and mega cap tech is outperforming doesn't mean there's weakening breath. It means that large cap growth and tech and mega caps are outperforming. That's what that means. We don't have to be like, oh, that means that, flight to safety and these are the last remaining stocks going up. Like, we don't have to make up implications of technology outperforming. Technology is just outperforming, right? Which is perfectly normal in a bull market because in the fourth quarter last year, everything was working except for technology, right? And now we're getting that rotation. So let's zoom out because people are like, wow, this is unprecedented. The technology, what is it? Apple's bigger than the Russell 2000, right? Again, that doesn't mean weakening breath. That just means Apple's bigger than the Russell 2000. Fun fact, the Russell 2000 is never going to get bigger. It's a small cap index. It will always be a small cap index. However, mega cap stocks are going to keep getting bigger in case you hadn't noticed. So not only is it not a big deal that Apple is bigger than the Russell 2000, like it's cool, like it's funny, like haha, Straza, Russell 2000, Apple's bigger than the whole thing, funny haha. But when you take a step back, just my conclusion is expect more of them. Google, Microsoft, like the list of stocks that are bigger than the entire Russell 2000, in my opinion, is going to get bigger, number one. Number two, technology stocks are outperforming, right? They came back from their underperformance over the last couple of years. They're now making new 52-week highs on a relative basis, but we're not even back to the 2000 highs 23 and a half years ago. We're not even back there yet. So there's still a lot more room to go. Now the fact that we're making new highs, right? And everybody's like, oh, it's only 5 stocks, right? Last year they were bitching that, the mega cap stocks weren't working, right? And everybody was complaining, but everything else was. Now they're complaining that they're the only ones working, even though they're not the only ones working. All right. So what I'm expecting is some kind of sector rotation. Perhaps we see a little bit of a lift, a continued lift in interest rates, right? Now that everybody's thrown in the towel and inflation's not a problem anymore, now we start to see the inflationary signs again, right? That's perfectly normal, sentiment unwind. And if we're going to get rotation, Spencer, throw up the old industrials in there for us. Consensus here is that this is a massive top, right? Massive top, cyclicals and industrials, and we're in the midst of a crisis, right? I keep waiting for this crisis that they keep telling me is coming. Meanwhile, stocks keep going up. These reversal patterns, these distribution patterns are characteristics of reversals. In order to have a reversal, by definition, you need something to reverse. And I'm just not seeing this like massive uptrend, that in, like a 6-7 month distribution pattern is going to reverse. I'm not seeing that at all. This to me has all the hallmarks of a consolidation after that initial thrust off the lows. And that to me is what it looks like. Move on to the next one. We're looking at JP Morgan. People are like, oh, this banking crisis. Why? Because these little tiny banks that no one's ever heard of disappeared. I've never heard of these things. And I do this for a living. I've been doing this for 20 years. These are like Northern California banks. I lived in Northern California for 5 years. I still never heard of this thing, right? So I don't think it's a big deal, particularly with the fact that JP Morgan, most important, it doesn't matter what I think, JP Morgan shareholders don't care. That's what I care about. What do they think? So I think that this crisis is non-existent. I think it's a figment of people's imagination. If we are above 142, I like JP Morgan long. Target up near 170 as part of that cyclical rotation, industrials included. And one more thing, finally, we have not, the bears are calling to the underperformance of small caps. We've been buying small caps. They're calling the underperformance of industrials and cyclical stocks. We're buying those too. They're calling, you can also just throw in that group China, right? You can just throw that into that group China. If you want to throw in the magazine cover. So China has been an underperformer as well. Emerging markets in general, by the way. So it's not just China, it's emerging markets in general. So if we're going to get rotation, which is perfectly normal for a bull market, sector rotation, perfectly normal for a bull market. It's the lifeblood of a bull market, we say. I would argue emerging markets can probably be part of that category of they're not participating. So now would be a logical time for them to start. And then boom, our favorite contrarian indicator, our good friends over at The Economist dropped this Peak China magazine cover on us. My suspicion is that it is not Peak China. It's probably the time to be buying China. So I'm looking at 4 stocks that are already outperforming, already doing well in China. Throw up the VIP, because you know how we roll around here at the morning show. We VIP everywhere we go. So we're buying the VIP Shop Holdings, mid-cap internet retailer out of China. If we're above 15.5, I like this one long, already making new 52-week highs. China's nowhere near 52-week highs. This stock already is. I like that. If we're above 15.5, I like it long with a target of 24.5. And then finally, just a little bit of foreshadowing. We talked about that industrial chart. Throw it up real quick, Spencer. That chart of industrials up a little bit, up 2. There you go. Sean is going to come in and talk about the trade that we put on to express a bullish thesis on what everybody thinks is a bearish chart. And that is the state of the markets. How'd I do? Not bad, huh?
Beautiful, as always. So eloquent.
Succinct this time.
You said 4 Chinese stocks. I just deleted one out of the deck as you were talking, so my bad.
4 Chinese stocks? What do you mean?
Oh, I thought you were going to go through 4 that you liked.
No. Just throwing out the VIP, because that's how we roll around here at the morning show, right?
This is by far the best looking one, and it's been that way for a while. And it goes back to that whole theme, right, that you and I have been so obnoxious about, probably myself more. Buy the bases, buy the completed bases, right? And VIPS is very much that. Now high and tight consolidation above the base breakout level. Probably going to get a fresh leg higher. When that pressure comes off Chinese stocks in general, again, as always, look to the leaders like VIPS. What else we got? We talking earnings this morning?
All right, what's next, Spencer? Keep us moving.
All right, let's get that earnings calendar up on the screen. You can see here we're mostly to the end of earnings season, but we got a few more stragglers. The big ones today: Walmart, Alibaba. So let's go there right now. Walmart's
This is a beautiful graphic, Spencer. Wow. This is really something. I love it.
Shout out to Izzy. All right. Walmart. It was a good one. The stock is, I think, up a little bit this morning, but it was a good report. Their earnings per share, EPS, $1.47 versus $1.32 estimate. So they beat that. Sales 152 versus $148 billion. So they beat that number. They also raised their fiscal year guidance, and their comps all came in good. So it was a good report for Walmart. Boys.
Stock is up this morning?
A little bit, marginally.
Still hasn't cleared that base, though.
No. But, it's looking a lot better than some of its peers. It's right there. If it's not peeling back off of, the upper bounds of this range, it's got the pivot highs there, too, from late last year. If it's the longer it's going to stick there, the more likely it's going to break out. I have a little bone to pick with Walmart and Target from the last 2 days. Guys, since when do these companies come out and start talking about organized crime and shrinkage affecting their business? They're saying that they get stolen from or basically robbed by the mob at every point along the supply chain, from the ports to the warehouses to the stores themselves. Are you telling me people are stealing goods more than they were like 5 or 10 years ago? Why are we just hearing about this now from both of these companies? I feel like this is something that these, companies and their leaders just keep in their back pockets for a bad report. And then it's like, oh, look at the people are stealing from us. That's why our earnings aren't, hitting the marks. Give me a break. I think that's really a joke.
It's funny that you think it's a joke. With your experience and the shenanigans you've seen behind the scenes for so many years, you sort of become this conspiracy theorist when it comes to this sort of thing. But I got to tell you, most of the time you're right. And it's not a conspiracy theory. And it makes perfect sense to me. That's exactly what these guys are doing. They're keeping it in their back pocket.
Talk to me about things that are, extraordinary items or outside of the normal course of business. If you're telling me that, truckloads of TVs are getting stolen, I've seen that on Sopranos. I already know that's happening. Talk to me about something new and different. That to me is just, in the ordinary course of their business. This is just a business risk for these guys. So I thought that was interesting because Target did the same thing. A lot of talk about, and it's funny too, they call it shrinkage, right? They don't call it stealing. It's shrinkage is the accounting term for it. So
is that what it is? The way I grew up, shrinkage was something else, but all right.
Moving on. Baba?
On that note, all right, Alibaba. Let's get that chart up on the screen right here. Baba, it was a good report for them too. Their earnings per share, $1.56 versus $1.35, beat that number. Sales, 30.3 versus $30.24 billion. They beat that number as well. They also announced the board has approved various spinoffs, and they are exploring IPOs for some of their subsidiaries, which we know they needed to do to get in the good graces of the government, which they did last year. So it seems like it was the mostly good report for Baba.
Yeah, I'm seeing a lot of commentary here also. I guess the shares sold off a bit in the after hours and this morning based on just the revenue miss, but they've kind of muddied the report with all these other headlines, right? All these spinoffs, right? The board approved them spinning off their cloud intelligence business line as an independent, publicly listed company. Independent of who is what I think whenever I hear this kind of stuff about Chinese stocks. So I don't know why you would want to. That would be like the United States wanting to take Amazon and break it up. I think it's more powerful as a giant conglomerate than it would be as individual parts. And it seems like that's what they're doing with Alibaba. They're taking their biggest company, the big tech behemoth, and they're breaking it up. And I don't quite understand that. No?
I mean, listen, it's got work to do. I don't really give a shit what they do behind the scenes. They could break it up to 100 companies, keep it into one. That's not my problem. I'm interested in how we're going to profit from this thing. And it's really messy. If we're going to get rotation into China, you're ultimately going to get a breakout above 120. We haven't seen it yet, but that to me is the trigger. So keep an eye on that one. In the meantime, it's messy. I got a very close eye on China, particularly with the rotation that may or may not be coming. But this will be an interesting place to look to see if we get that rotation. But until Baba is able to get above those former highs, what is that, back in 2015 or so?
Yep.
2014,
120.
We're going to talk about 20. That's the level.
Yep. But look, even if it gets above 120, look in the lower pane of this chart here, right? Lower panel shows you the relative strength, BABA versus the S&P, lower and to the right. And then if we just look at some of these leaders that we talked about, move on down to like 10-cent music. We do have a chart against China in the lower pane, but it's still outperforming the S&P, up and a little bit of sideways. We want to buy the ones that are leading. Look at VIPs, up and consolidation. I would focus on the ones that are showing relative strength, and BABA's just nowhere close to that right now. And I don't know what this Miniso Group Holdings is.
MNSO.
Yeah.
So MNSO, we're looking at Miniso, MNSO. So this is a close to a $6 billion market cap. It's Chinese specialty retail, just classic consumer cyclical coming out of there. If the stocks, if China's going to do well, these are the types of names that I would expect to be outperforming. And that's really what we're seeing there. It looks a lot better than Baba, I'll tell you that much.
Yep.
16 and change, 1620 or so. That seems like a good level. Those are the former highs from late 2021. Target up near 23.5. Doesn't look terrible. It's not the cleanest, but I got to tell you, if we get that rotation into these cyclicals, we get that rotation into some of these underperforming areas that we've seen, again, which would be perfectly, I don't know if you caught the state of the markets earlier in the show, but if we were to get that rotation, it would be perfectly normal market behavior. And these are front and center. These would be the ones that would be benefiting the most, in my experience.
I'm with you.
Anything else?
On the earnings front, yeah, we got a few. Today, Thursdays are typically the busiest days of the week. Cisco reported. What?
Sorry, go ahead. I got something to say about these guys. Yeah.
Okay. After the close yesterday, earnings per share of $1 versus a 97-cent estimate, so they beat that. Sales 14.5 versus a $14.3 billion estimate, so they beat that as well. They gave some guidance for the quarter and for the fiscal year that was essentially in line to slightly above estimates. They talked a lot about their backlog and their inventory. They said they're going to end the year with roughly double their normal product backlog, which I guess depends how you look at it. That could be either a good or bad thing, depending on how you want to spin it. But I believe the stock is down this morning. It is down about 4.5%.
They're basically they're reporting futures orders, right? And that's what was down 23%. And just like any good analyst, the market will say, okay, so this was EPS, you beat, this was revenue, you beat, that's great, but it's in the past now. And they're going to look at the most recent or most timely data, which is the futures orders, which is telling them what next quarter's revenues or EPS is going to be. And even though they beat on top and bottom, stock is lower because the future looks bleak, right? I would just say for these legacy tech stocks, any of these traditional Dow tech stocks, we don't buy them. We don't even think about buying them at this point. And I'm going to show you why. We got 3 relative trends here. I'm not just going to pick on Cisco. This is disgusting. It's gross. Look at it since the dot-com bubble. It's been dead money on a relative basis. This is the opposite of leadership. And let's go on down the line. Look at Intel. Is Intel relative to the S&P? These are not stocks that you want to own, right? You could be in an NVIDIA or an AMD or a leader in semiconductors. You don't want to own the classic laggard. IBM too, when it comes to computer hardware, or whatever the hell they do these days. You know what's funny about IBM too? This is the company that was supposed to do all these AI things. Who remembers Watson from 10 years ago? So now that AI is finally becoming a thing, IBM apparently.
Well, the IBM lady was in Congress the other day with Sam. When they were drilling them about AI and stuff like that, the IBM lady was there because she's on whatever, all these boards of AI, that talk to the president and all this stuff, so they're, at the heart, they're in it. But IBM, Cisco sucks, dude. This thing is,
I have no faith in companies like this, right? Entering a new industry or area of growth and doing well. They can't even sell their old computers and make money and do well anymore, right? They can't do what they're supposed to do well. I trust the Googles and the Microsofts and the Apples who do perform and enter new markets all the time and crush it. IBM has proven time and time again that they're not an innovator anymore. And none of these 3 tech companies are. I want to be in the innovators. I want to be in the companies that are growing. These stocks are all just dead money. Cisco, how boring, right? You beat on top and bottom, the market still doesn't like it. That's just what these stocks are.
All right, one more, Spencer. What do we got?
We actually got a couple more. Sorry, I know this is painful for you. Take two. We'll do it quick. TTWO.
No, it's not painful for me. These are good. It's just that these things suck. Like IBM, Cisco,
All right.
Baba.
Well,
These things are
well,
hot messes.
Let's pivot away from the value tech. It's maybe, I don't know, maybe do you like Take Two better? The stock is up nicely this morning. It's up like 13% here. They reported after the close yesterday. Earnings per share beat, sales beat, bookings, which is the important number for video game stock companies. They beat as well. And yeah, that's the story.
Well, here's why I care, and this is why it's not painful for me at all, is because this particular stock is now pushing up against that resistance. Look at those highs from 2018 and 2019. Those levels right around 140. That's where we are today. That's where the market is gapping to on that earnings. So this is front and center. This is what we're watching. If they can clear 140, which they may or may not today, I mean, 12% pre-market. That's a hefty number on a $20 billion stock. You know, you're talking a few $1 billion in market cap. I guess it's not that much, but it's not nothing. 140 is the big level there. Do they take it out today? Does it take a few weeks and then we break out? Does it take a few months? Does it not break out at all? I don't know. But above 140, I think you got to take a good look at Take Two Interactive.
Trading at 140 right now, pre-market, and we see this all the time, right? These key polarity zones will come into play on earnings fireworks, right? A stock will move and then it'll stop on a dime or, right at prior cycle highs or something. So these levels are always coming back into play, particularly on big moves and earnings acting like a catalyst. My dad called me yesterday. I forget what stock it was. Oh God, but he's like, hey, I was watching this stock and I thought that resistance was at like 122.50, the August highs. And he goes, it ran right up to 122.50 and then it pulled back. So even my dad's out there watching the August highs drawing support and resistance levels. I love to see it.
All right, Spencer, let's talk about bougie Canadian clothing.
You wear this stuff? You lived in New York. You had one of these? This was a big...
I was wondering if either of you owned one of these.
I do not, but I'd be shocked if Straza didn't.
No, come on. I never got into this stuff. This and the Ferragamos and all that, not for me.
Well, I do have Ferragamos because they're the most comfortable shoes, right? You could cheap out and you're going to need shoes every 6 months or something like that. Or you could invest in proper, footwear and you have to buy them less frequently. So shout out Ferragamo.
I never got into the fancy stuff. Even when I worked at these hedge funds, I was wearing Nikes and jeans and a polo.
Yeah, and then he has lunch with me, and then he doesn't get into the fancy stuff, right, Straza?
To each his.
All right. Canada Goose is one of the top gainers in the pre-market session this morning. Last I checked, I think it was up 80% or so. Earnings per share came in above estimates. Revenue came in above estimates. They're still not profitable, but the losses are shrinking, so they're going in the right direction there. Net loss of $3 million versus $9 million in the same quarter the prior year. So going in the right direction there.
Going in the right direction. Spencer, this company came public 6 years ago, and they're profitable. Like, how long can you go in the right direction for? This is crazy.
I'll tell you what, though. This bottoming throughout 2022 into 2023, this pattern continues to come up again and again and again, particularly in growth, whether it's software stocks or like things like DraftKings or technology, semiconductors, consumer discretionary. You're seeing these bearish to bullish, reversal patterns taking place over 12, 18 months. Bottoms are a process, and maybe this one hasn't bottomed yet, and I'm certainly not going to argue that it has until it's above 25. It is not. Today's a pretty decent start, but we keep seeing this pattern again and again, Straza.
Listen, it's a nice structure, right? It's working on that right shoulder right now, and this one is a great example of exactly what we're seeing, because you're seeing the pivot highs and the breakout level right at the August highs from last year and then the year-to-date highs, which is the case for the majority of these bases, right? Really clean there. We ran right up to the August highs, tested them in January or February of this year, pulled back. Now we're forming that right shoulder. It needs more time, but like Spencer said, moving in the right direction, maybe fundamentally, it's also moving in the right direction technically here.
Cool. D-Lo.
All right. Sorry. We got last one. And this is, I have to admit, I had to look up what this company is because I didn't know.
They probably deliver groceries or something. Let me guess.
Small cap software.
It's emerging markets payments. So that's what they do. Anyway, the only reason I put in here is because it's the top one of the top pre-market gainers this morning. It's up 50 stocks up 15% this morning on an inline EPS and a slight sales beat on their earnings last night. So, but the stock is up, like I said, 15%.
When I see a stock like this, some of these growth stocks were hit so hard from 2021, 2022. You know, they're in these 70, 80, 90% drawdowns. They're having, positive reactions just on news that maybe they're not going to zero, right? Like just that they're not like a going concern risk anymore. I think you're seeing really big reactions because a lot of these stocks were priced as if they're going away over the past 2 years. So I think the market, still has to kind of adjust for that.
Who had Uruguayan software in their bingo card, huh? Come on.
Uruguay. Wow. All right.
Uruguay. And by the way, Uruguayan wine, very underrated. I encourage everybody to drink some Tannat from Uruguay. It's a hot trend. I'm on board. Uruguayan wine right now is some of the hottest juice in the business. I recommend some Tannat, which is historically a Southern Rhone wine. They're growing that in Uruguay. Bodega Garzón. Get involved with some Tannat from Uruguay.
Uruguayan. Who would have known?
All right. Sorry, I cut you off there, Straza. We got a couple minutes before our first guest.
Spencer, that's your job to cut Straza off. You're very good at that. I like it. I'm into it.
All right. Let's bring up yesterday's edition of the chart report. I had something that I thought was cool, but I don't know if you guys had the chance to peruse it yet.
Of course.
Or
peruse.
If you had a favorite.
Frankie baby.
Shout out Frank Cap. Chart of the day. Frank Capilleri talking about that region. Is that what got you going, Spencer?
No, what got me going was actually at the very, very bottom here. This one. This is the first. This is the quote: the first actively managed ETF to fully utilize artificial intelligence as a method for stock selection. It's turning 6 years old in October. AIEQ is the ticker, and the S&P has just trounced it, which I thought was interesting.
I would love to know what kind of stocks it's picking and why.
Oh, I'll tell you. I'll tell you. You ready?
Yeah, please.
Yeah.
I come prepared. All right. It's got 27% of the fund in technology stocks.
Shocking.
So let's look at some of the top holdings. We've got
how much percent in
27.
27. We've got top holdings consist of Carvana, Builders First Source, I don't know that one, BLDR, Affirm, Datadog, Zscaler, Coinbase, Uber, Royal Caribbean, that's interesting. Okta, Wayfair, Bill.com, Open Door. You get the idea.
Speculative growth stock index. All right. I'd rather buy ARK. I don't know. I'll let the humans do it.
I like Brian Lund's. Shout out Brian Lund. He's going to be a guest on tomorrow's show. Brian Lund's chart on the regional banks. If you want to scroll to that right there. You just passed. There it is.
Yep.
On the regional banks, really interesting performance yesterday. Nice bounce that we're getting from the small caps. Maybe that was it. Brian is suggesting that perhaps it was. Maybe it was. Maybe it wasn't. It wouldn't surprise me at all if it was. We're buying small caps, so we're indirectly betting that was the bottom in regional banks. The fact that financials in general haven't broken, the fact that JP Morgan continues to act so strong, sort of points to that. Again, none of us know what's going to happen next. We got to weigh the evidence. But if you are a believer that stocks are going higher here, and we're going to get that rotation, which we're obviously been betting on over the last couple of weeks, and it's starting to take place, then I think regional banks probably do need to have bottomed. And then over the last week or so was the retest of that bottom, right? Sort of the what he's pointing out here. So shout out BC Lund.
Here's what I'll say about the regional bank action. I can't look at these regional bank charts and think anything positive about any of them, right? It's terrible. What I can do is look from an intermarket perspective, and at least for me, as someone who doesn't want to make the bet that regional banks are going to continue in one direction lower while the broader market continues in another direction higher, I'm looking at the price action from tech, communications, the indexes, these mega cap stocks beneath the surface, more and more bases continue to resolve higher. I would think if the market's going to just keep cruising, regional banks are going to have to stop falling. So that to me is promising when I think of regional banks.
Yeah. Cool. Nothing else stood out, Strauss?
No, I'm excited to have Brian on the show tomorrow. We should talk about banks and what he's seeing there.
Cool.
There's the QR code right on top of my face. Let me take that off the screen right now. But I do want to just mention that the chart report, which is the screen I was just sharing, is a free daily note that compiles the best charts and trading wisdom from around the world of finance. So use the link that is in the description of this video on YouTube. I'll put the QR code back up there for 1 second if you want to scan that. Use that link, either of those, to subscribe to the chart report and get the latest issue today. That is what I want to say about that. It goes out every day. It's fantastic. Okay, it's 9:01. I just shot Howard Lindzon a quick note to remind him to pop on our show with us. So when he joins us, he will join us. But in the meantime, let's take a look at the hot corner.
Do it.
Which we have for a little further down there. There you go, Fonz. There you go, Fonz. Yep, let's take a look at the hot corner.
Hot corner. So hot right now.
All right, this is today's hot list. Strauss, you want to explain?
Yeah. So we had a Mr. Warren Buffett on our list yesterday that we talked all about. Kind of took the spotlight. And today we have Kelsey Warren up here in the top row. Energy Transfer Partners. They're a midstream operator, pipeline company. He is the executive chairman, but he's also the co-founder of the company, by far the largest shareholder. He owns a ton of shares. So I think he is the largest holder. $12.5 million purchase. He bought he bought 1 million shares at $12 a share roughly. And that's a huge buy, right? So it's something we're watching. He's been out here buying. He's had, I think 10 filings just in the last 12 months. So he keeps coming out and buying. Look, this stock to me right now, when we think of the energy space, and I'm seeing so many charts roll over and make new lows, Energy Transfer's got a nice base here. They pay a solid dividend. I don't hate it. As the founder of the company, the man obviously has a lot of money. He's loaded. And, 12.5 million might not be too much, but still very significant insider buy. The base looks good. I think above this, 1150 level. We could be long the bias higher. That's what stood out today.
All right. Thank you very much for that, Straza. Let's get that off the screen there. Hot Corner finds out where the big money is moving. You should sign up for the Hot Corner today. The Hot Corner tracks all the biggest trades from hedge fund titans to DC politicians, activist investors, and it's delivered in your inbox every single day for free. So use the QR code up on the screen or use the link in the description of this video and get the Hot Corner today. Okay, on that note, our guest is here, and let's get him on the show right now, Mr. Howard Lindzon, as soon as I find my graphic. Howard Lindzon is the founder, managing partner of Social Leverage. He's the co-founder of StockTwits, an early investor in Robinhood, eToro, and Coifin. Howard Lindzon, welcome to the show.
Can't find my Adderall. What's going on, boys?
Lindzon!
I was just saying I need more coffee, but that works too.
Rally cap.
What's up, buddy? How's Miami?
What's going on? How about those Heat? I was wrong. Boston's got to win 4 in a row, or I already lost another bet.
What are you? Are you a Raptors fan?
I'm a fan of life.
Howard's a fan of whichever basketball team is playing very well that season.
So
I am
not the Knicks.
Life is too short to be a fan. Kids today, with their degeneracy, should be only rallying around teams that are good. There is nothing wrong with being a fair weather fan. You will learn this later in life. I'm saving you kids. Don't listen to your parents. It has nothing to do with what city you were born in. Go with winners. Follow winners. It'll serve you.
All right.
Speaking of winners, which winners are you following?
I got to, me. I am been very quiet. I was very focused on seed stage investing and figuring out what's next, right? We had this end of cycle in 2020. It went on through 2021, let's say. COVID extended the runway, and in hindsight, it's easy, but I'm saying, obviously. According to the experts like yourself, we're in a new bull market. It looks much different than the bull market that helped me make a lot of money and get to a lifestyle that I'm comfortable not losing all my money. So, I'm in the middle of like a life change because I'm 58 and same excitement from catching and riding stock market type trends. So, I can give you a lot of ideas, but I don't have a lot of conviction right now. I've been working through this thesis. America keeps saying, "Oh, we're losing the middle class." I don't do demographics or follow those type of statistics, but with my eyes and ears, I think there is something to be said about there's two economies, right? And somehow it is about the middle, meaning that the two economies that exist are those for the degenerates, like my son, who is not a degenerate, but a young person who has access to, yeah, as a young, can you hear me?
Yeah.
Yeah, as a young person who has access to an iPhone and Tinder and Uber and Netflix and DraftKings and Venmo, he can live a pretty good life if he is good to the people around. If he handles his social network well, there is a good life to be lived by a degenerate lifestyle, which is you don't have to have a ton of money, and you can have a lot of fun, both in travel and gambling and media and entertainment. Then there is the LVMH economy, which we see play out in France, for example. And this, JC, is like the French stock market is doing well. And a perfect case of the stock market is not the economy, because the reason the French stock market is doing well is four biggest companies are the highest margin kind of non-tech businesses in the world, Hermes and LVMH. So the stock have proof that the stock market is not the economy, because no one works in France, and yet they have these high margin in favor businesses that are very much modern Berkshire Hathaways. They have very high margin products. Their version of Coke is a scarf, and their version of cash and insurance is liquor, very high price liquor. So they're running these incredible companies that are at the right place at the right time in a world that has very rich people. So we're going to have, if you were to bet and I were to make one bet, and that bet will end when there's civil wars around the world or some kind of crazy class war. But until that happens, people are going to do what people do, which is be degenerates and enjoy their life, and or celebrate with the entrapments of being wealthy, which is LVMH and very high class experiences and living like a billionaire. And that's a very high margin business. It's not going to cater to the billions of people. So I think it's those businesses in the middle. A lot of times, JC and Steve, it's not so much which are the winners, but also avoiding losers. I think the trap is these companies that have this somewhat scale, but don't really have the margins and have big revenue, or have these huge companies with a lot of employees, but they're not growing because they don't have pricing power, or they're not growing because they're not catering to the millennials.
So hold on, two things. First of all, France's stock market and the United States stock market is night and day, right? The S&P is 26% technology, France is 4%. The S&P 500 is 8% industrials, France is 23%, right? So just night and day, the types of stocks that that Howard alluded to, just night and day in terms of two different stock markets, number one. Number two, I think what you're telling me is, stick with the degenerates, stick with the wealthy, the middle class, just avoid that altogether. But then why are home construction stocks doing so well? Like, isn't that sort of middle of the ground, not the wealthy, not the degenerates, but somewhere in the middle?
Well, consumer stocks in general, right, are doing really well, Howard. I hear you talking about the consumer, LVMH, people are spending money. Are you saying only some people are spending money? Because we're seeing these fast food restaurants and a lot of these consumer businesses here in the US, at least, keep making new highs.
Well, McDonald's and Chipotle's do cater mostly to the degenerate Apple Pay economy, right? Like they have to eat while they're gambling. And McDonald's and Chipotle have modernized their menus. They have the right price for the degenerates. Degenerates the degenerates can't afford to go to Carbones, and they would love to. And if they save up and it meets their Instagram fancy, they may. But really, they would rather parlay for than go to Carbones. Therefore, you own DraftKings and McDonald's is kind of your degenerate player. You own DraftKings and Chipotle's or Wingstop because they've blown all their money on their vices. Because it's hard to live in America. So they're not going to spend it as you would think on fancy restaurants. They may spend it on travel and hotels, but I don't think they'll spend it on fancy restaurants. So I think, again, these are just theses of what I see with my eyes and ears. And I have 2 millennials myself that I own and operate, as I tell people. And so, again, it's not perfect, but I like to invest in how I see, and prices are confirming. If you can hear me, prices are kind of confirming what I see. So I don't know if it's self-fulfilling or if I'm form-fitting my thesis to what I see in prices. I can't guarantee you that I'm not just making this up based on what the prices I'm seeing, because the mind plays tricks on you. But with my own eyes and ears, in seeing my own spending habits and my children's spending habits, I really do feel that you have to cater to one end or the other to, at the low end, get scale, and at the high end, have margins. And those are the 2 businesses that investors are rewarding.
So that's what you're seeing from your son and daughter. What are you seeing in the private markets, though? Because you're privy to much more unique data than what we're used to looking at. Typically have like an early read on trends and what's going on. Like what's happening in the private market, particularly in tech and these growth stocks.
Listen, I got a lot wrong in the sense that for about 10 years, the private markets were making sense to me, and maybe it was just a moment in time where everything, there was this wall of. Let's go back. I did very well in the private markets, but I'm not going to say that I'm in now that it's over or that we're in this new era. You have to go back and be honest and at least look at what happened and see, okay, I was smart just enough to be alive and participate in it, but let's really be honest about what happened. You had this incredible wall of money. You had this incredible explosion of Web 2 open, semi-open. They called themselves open. We all know they were semi-open, and in fact, they're now closed networks that had exponential, like we call it social leverage, exponential free ability to do leverage your brand and your name, because Facebook and Google and Twitter and LinkedIn didn't know how to price their inventory. And so everybody could grow on their backs. What we now have, because that boom went on so long before Apple and Facebook closed their doors, and Twitter and LinkedIn, is you have a lot of false prophets that have form-fitted that 10 years to say, everybody's stupid except us. We invented growth hacking. We invented, the Fed's stupid. And we're seeing this with, podcasts and, the Kramer 2.0s, that they're taking credit for being geniuses in what was an incredibly beautiful era to be long tech, which was 0% interest rates, money printing around the world, open borders, coming out of the great financial crisis, plus this incredible onboarding of people to the internet, and they didn't have to spend money to grow. So of course we made money. Now, great products and companies on top of that.
Onboarding people to the internet or onboarding people to the market?
Both. All of it. YouTube, the market, the internet, iTunes, the cloud, hook us up. It was free. And I can invite 4 friends, chat together for free, and there'll be no ads. And then I can spam Twitter with my cat to get people over to StockTwits. And you could do whatever you wanted for about
Let me ask you this, because this isn't the Lindzon show. This is the morning show with JC and Straza. So before we kick you out of here, what was the last stock you traded? What was the last transaction you made in your brokerage?
Google. I've been buying Google all year.
Hell yeah.
Bit.
Someone's reading All-Star charts,
I've been
huh?
talking about.
Let's show them these tech charts before we get rid of them. I want to show them these bases.
In what?
Howard loves software. Show them the software.
But I wasn't buying Google because it was doing well. I was buying Google because I believed that they weren't dead and everybody was starting to write them off. So I wasn't like using my normal trend following strategy. I like Google.
So the way to invest in artificial intelligence, because I get asked this like every day, I feel like my answer is Google and Microsoft, because those seem to be working. And when you get cute and buy the other junk, that's not working, right?
Yeah, so that's what we've been telling
Yeah.
people. Like, what's the best way for a public market investor to gain exposure to AI right now? We keep telling people it's got to be the mega caps. Are we
This
missing
Google
something?
Bard is sick.
Yeah, it is cool.
Here's the thing about AI, the way I know so far. And again, I know as much as probably anybody, because other than Sam Altman and maybe Elon, because they actually know how to build chips and design this stuff. But I haven't gone to I've gone to 2 destinations. ChatGPT, I got the app, but I probably won't use it once once I truly get integrated to Google. And the second is Midjourney for images, meaning it's such a great feature to have image creation and a prompt that I'm willing to go to Discord, which I didn't use during the whole crypto bubble, and I haven't used Discord ever, and I don't game. I ended up going to Discord to pay to get to a second Midjourney. So that's how interesting AI is. And that's why Google and Microsoft and NVIDIA are going up, because 58-year-old idiots like me are willing to go find it. How interesting these products are. And you compare that to crypto, and why crypto was just, it's fun, but a bubble and still not enough users, is because no matter how much I get yelled at to do crypto, I don't even want it. And
You know,
so
I love that Lindzon talks about how he wasn't going to do something. He didn't want to do something. And then this new technology got him to do something. Like to me, that's a nice value add. And by the way, whoever took the under on how many times Lindzon mentioned pickleball, the under won on this segment.
pickleball's stupid. I mentioned it. Pickleball's stupid. Here's why.
Why?
To play. Everybody's trying to turn it into like what crypto is. It's got to be about money. Pickleball's a fun game. Okay. And
Fun for
if you
who?
watch
People your age?
for the player that's old, and the player has bad knees, or the player that like has given up on life, it's a fun little game, but it's not.
It's like par 3
after
golf.
10 minutes,
right?
it's like banging your head into a wall. So again, pickleball is a beautiful thing that's going to get exploited because America likes to make money off things. You know, that's just the way the world works. But from pickleball will come incredible other reimagining media and sports.
We got him going on the pickleball, Strazza. We got him going. All it took was
All
right, guys, we're up against the clock, so we got to go. I dropped the link to Howard's blog and Howard's Twitter and Howard's podcast in the description, so check it out. Howard Lindzon, always a pleasure.
Thank you, Howard. Love you, bro.
Bye, Howard. We got to keep the guests for longer. I could have done another 10 minutes with Howard.
I told you guys. But
Howard could have done another 10 minutes.
All right,
with Howard,
real fast. I got Kimmy Sokolov here just for 1 minute because she has to hop for her show. So let's get Kimmy in here and have her tell us what's on her watch list.
All right.
All right, Kimmy, I know you got to run. So real quick, what are you watching? What are you watching today?
All right. Well, yesterday was a great day. Obviously, the market was full speed ahead, but you never know that in the morning, right? And all of a sudden, everything started to take off.
I questioned you, Kimmy. I'm like, listen, Kimmy, you're mean reverting in nature. We're gapping higher on S&Ps.
Yeah.
You went with the trend and you nailed it.
Nailed
Kudos to you. Kudos to you.
Thank you. Yeah, Netflix was one of the ones that was like a late day trade. I recommended it at 338, like 80. I said it could go for today, maybe to 341. It hit that target. You know, this morning when I write my note, you know, I write it so early. It was trading. Netflix was trading like 344. Now it's 348. So that was on my list for a potential move up to 350. But this is what happens when you write a note early, things change. So sometimes I have to keep watching because, you know, everything changes. What I like at 7 in the morning doesn't necessarily what I like at 9:30, right? So my watch list could change. So I'm going to, you know, it's kind of hard to take it right now. It's gapping up so much, Netflix. I'm going to let it run and see how it does. But I might be looking for counter trend trade shorts today. The SPYs were trading up at 416. Like 50 this morning. It's pulling in. So, you know, I might be doing counter trend trade shorts. I might be looking at NVIDIA as a short. I might be looking at MU as a short. Potentially, I am watching. RBLX was another buy yesterday through 41.07. It popped to 42. I'm going to see how it handles the 42 area. I'm watching Lockheed Martin. First day, let's see if it could get above the 200 day at 458.18. for a potential move up to like 460. It's expensive stock. Sometimes it goes, sometimes it doesn't. I'll see how it handles the 200-day and how it dances around that. Maybe we capture a little bit of a move there. Maybe gets a little bit of a squeeze, but we'll see.
Kimmy, one question before we kick you out.
Yes.
I think considering yesterday's price action, like what a bullish tape we had. How much will you consider prior day's action or tape when you come into the next day of trading? Right? Like, is that on your mind at all? That stocks were ripping yesterday when you come into today?
Well, what's on my mind now is that we pulled all the way back into the breakout zone at 415. Okay. So this is what I'm going to see. I really want to see if we could get a push to 417.50, which is next resistance. And if we start falling back into this channel that we've been stuck in since really early May, back into the 412 area, because listen, the debt ceiling, all this stuff, it's like front running, the debt ceiling right now, right? So they're like, oh, a deal's coming through. Maybe if it goes through, we go to 421 on the SPYs. So I think it's going to be hearsay to everything really gets going. But, we could fall back in this channel today. We had a big bar yesterday, so maybe it falls back down to 413, 414 to 413. We'll see. We're not overbought, so we could keep going and push up to 417. So it's kind of like, it's a tricky little tape here. We had such great moves yesterday, lots of great buying opportunities. I'm not sure how it'll turn out today. It might not be as exciting and thrilling as yesterday was. It was like idea after idea. Okay, let's buy this. Okay, let's buy this. Oh, wait, we got another one. It just kept coming. Sometimes I stop and I say, I trade stocks, only stocks.
Yep.
You
Kimmy
can't trade
trades
options
stocks,
on
but
some of my names.
there are others who follow Kimmy's trading in the options market, but Kimmy's a stock trader. Yep.
I'm a stock trader.
You're the best, Kimmy.
What?
You're the best, Kimmy.
Okay. All right, guys.
All right.
I'm gonna hop.
Kimmy,
That's it. We'll see.
Yep, we'll let you go. I just want to say that Kimmy Sokoloff runs Day Trader Pro, which is an exclusive trading room where she live trades the market open every single day. She has over 20 years of experience in trading desks and has winning trades every day. Or I don't know if I can say every day, but most days. If you want to join Kimmy's room, email us. Just email questions at stockmarketmedia.com, and we will look into getting you into the room. So check it out. And Kimmy, thanks a lot. Always a pleasure. And we'll talk to you.
Have a great day, guys.
Go get him. Go get him, Tiger.
Bye.
All right. All right. It's 9:23. I just wanted to briefly cover some of the biggest pre-market movers of the day. There's a few we already discussed because they have earnings, obviously. But every day there's always some random stocks that are just moving a lot in the pre-market. This morning we have a couple SCPLs getting taken out. So we're taking over. So there's no trade to be made there unless you're a risk arbitrage trader. $20 a share in cash is the takeover price on SCPL. Then CWD recent IPO, super volatile. Stocks up like 50% this morning. So just crazy post IPO action there. Boot Barn, BOOT, they had earnings overnight as well, and they're down about 12-13% on their report. And those are some of the biggest pre-market gainers today that we didn't already cover as we head into the open here in about 5 minutes. What's next on our list here? You guys want to do some ratings?
Let's talk about ratings, and then I want to talk about this ESG article at some point too.
Oh yeah, you want to do that now?
Yeah. Talk about it.
Yeah. We meant to do that yesterday, and we didn't have time to. So, Straza, give us context. There was an ESG article in the New York Post, and tell us about it.
The tide has turned, right? We all remember when ESG was the new hotness, the biggest trend. Everybody was getting involved. Everybody was making money. It seems like this bubble is very much popped now. They're coming after boards and investment managers for pushing ESG initiatives because, frankly, in many cases, it is a violation of the fiduciary duty of investors and stakeholders, right, to act in a way that promotes profitability for the company as opposed to promoting climate change or something else, right? That's not something that's supposed to happen in the boardroom. And now you're actually seeing, different agencies and even states come after what's going on. Let me just read a couple clips in here. Did I just lose it? Yeah. So This is the Vanguard CEO, Tim Buckley, speaking to the Financial Times. Our research indicates that ESG investing does not have any advantage over broad-based investing. We've been hearing this stuff for a long time now. I think it was the head of ESG from BlackRock like several years ago now, who left the company and started smashing ESG. So there's really been like a huge backlash. We already know that investing in an ESG company over a non-ESG company doesn't give you excess returns in any way, shape, or form. Also, it's just a complete sham. Certain companies like Tesla are given very bad ESG ratings, while Waste Management and ExxonMobil might be on a list.
And the cruise liners are literally destroying the ocean, and they have high ESG ratings. Are you kidding me?
Yeah. So we covered some of this in an article. We did a pretty long report on it like 3 years ago. You can find it on the website. I forget what we named it, but like,
I think ESG is a scam that only fools believe, something like that.
So let me read some of the stuff.
It's such a scam. Like, you got to be such an idiot to think that this is a good idea.
It's getting very extreme too. Like certain proposals that talk about racial equity audits for Home Depot to see the adverse impacts on non-white stakeholders and communities of color.
Oh,
Yeah, so it says like Pfizer, Verizon, Amazon agreed to the race equity audit rather than lose a shareholder vote. In another proposal, Disney was asked to report on pay gaps by sex and race, which it opposed, before BlackRock and State Street voted in favor of the audit, which then passed. So, they're telling Costco to set climate targets for Scope 3 emissions. So a lot of these things, and then states like Florida, Oklahoma, Texas, West Virginia, all the ones you would expect, are really pushing back and enacting anti-ESG laws, which don't even allow these things to come to vote, right? So
you know what this is? You know what this is, Straza? This is another classic example of Wall Street finding an opportunity where weak-minded individuals who are easily convinced are making donations, and Wall Street is very smart and does a great job of taking money from them, right? This is the what do they call it? Like, it's like the lottery, like it's a tax on the stupid. This is one of those, right? And Wall Street does a great job of exploiting the weakest minded people. And this is another great example. Good for Wall Street. Good for them.
It was Wall Street's latest scam, right?
Yep.
They'll have another one in 5 years, and they were all making money, right?
Yeah.
Between the underwriters, the ratings agencies, the auditors, the investment managers. The government loves it because it's
everybody but the shareholders.
Right. It's just the poor shareholders who are screwed. So this whole thing, I love to see it blow up like this. I hope nobody even remembers what ESG was 5 years ago.
Yeah. Good for Wall Street.
Can I add a thought?
Wall Street wins again.
Can I get you guys to say maybe, or maybe you don't agree with this, but maybe that it started off as like it was a good idea in theory, but like a terrible idea in practice?
No, it was a terrible idea in theory. Why should a company's stock be worth more because they have a more diversified board of directors or whatever? Like, what does one have anything to do with the other? Like, the board of directors should be the best people, not who that person is sleeping with or what color they are or where their family's from. Like, why can't we just hire the best people? I don't
listen. For-profit businesses should be run for profit. If you want to promote change, start a nonprofit.
That's right.
Just simple as that.
All right, move on. It's the company's job is to increase shareholder value.
Yep.
Period. Not to make people happy. No. You're a publicly traded company. Increase shareholder value. That's it. That's your only job.
And if you disagree with that, that's a much larger and different argument than ESG. Like that's a whole nother thing.
Yeah, you're in the wrong country. You're very confused on how this works.
I've spent enough time on this.
All right. We are knocking on the door. Oh, there's that opening bell. Just as I say,
who's better than us, huh?
Let's do some street moves right now, some analyst ratings, and then we'll talk about what's happening in the market today.
Street moves.
I'll be honest, I didn't really see a whole lot today that interested me. Straza, you said you saw a FedEx upgrade, which I did not see.
Yeah, from none other than Deutsche Bank.
From Deutsche Bank.
You know what I was thinking when I saw that upgrade from Deutsche Bank? Does Credit Suisse do they still have an analyst team? I don't see.
Remember, when they were before they were in the process of collapsing, and they had the audacity to upgrade and downgrade other stocks. It's like, bro, take care of your own shit before you start opining on what other people are doing. You know,
it's really good. Yeah, can't make this stuff up. I saw some ones that stood out. Listen, I don't have much to say about FedEx. Nvidia price target bumped 350 at Oppenheimer. Oppenheimer always loves Nvidia. Nothing new there. United Airlines, Morgan Stanley maintains overweight. United Airlines raised the price target to 75. That one stood out. TJ Maxx maintained overweight at Morgan, price target 93. I had one more here. Oh, this is what I want to talk about. DraftKings, baby. Upgrade $36 at Needham. Spencer, you said yesterday, you like to pay attention to certain of like the big analyst shops. Sometimes these boutique shops do the best research. And not only do they do the best research and put out great reports, they'll often have specialists in various industries, right? So I like maybe Needham, specializes in gambling, whatever. I'm not saying that they do, right? But like you'll want to look to those reports. And also, more important than anything, they have far less conflicts of interest. They're far more independent, these boutique shops, boutique sell-side shops, rather than these big brokers that are doing the underwriting for all the companies that they're upgrading and downgrading.
Yeah, the Chinese wall means no wall, right? You know how like we don't trust things that are coming out of China? You don't trust Chinese walls either, right?
Listen, I like the DraftKings.
I like it too. I like this with Straza. For me though, 23 is the number. That's the number. Straza hold on. Straza likes to let it dance a little bit. I don't have a problem with that. To each his own. Let it dance to 21 or so. I like 23 fixed level. Above 23, I really like the DraftKings. Below that, if Straza wants to let it dance, knock yourself out. But I really like it above 23. I like adding to positions above 25. Yeah. And I know Straza agrees with that one.
I do. And listen, I don't want it to dance either. I want it to run higher. But I hate getting shook out of positions. A lot of times on these bases, if they take time to go, I'm exiting, I'm re-entering, I'm exiting, I'm re-entering. I would rather than take all those transaction costs and little slippage here and there. I'd rather just give myself a nicer little cushion, let the base play out. Sometimes these things take time. We talked about it yesterday on one of the calls that we did, how we had that earnings gap up. You see it on the third arrow here at the base. No, go back. We had an earnings gap up last quarter, right? You see it on that third arrow there. And then we corrected for a month before, ripping back and resolving higher from this base. Now we just had another earnings gap up a few weeks back. And, we're getting a little pullback and corrective action again. This could take some time. Maybe we do retrace to 21. I don't want to get shook out if we're just retesting the upper bounds of that base.
All right. That was it as far as street moves, ratings land. Again, Straza really ran with that one because there wasn't a whole lot that I found of note today. And that's going to happen. There are going to be days where, he sees things that interest him. And
JC, why don't you open a DraftKings account? Give us some boots on the ground research. Put some money on Miami in 6. Why don't you put your money where your mouth is, and then you can also let us know how this DraftKings thing is.
Well, for one, I have enough action during the day and in cryptocurrencies, and I don't need to gamble on sports. I could just enjoy the game. I don't need to worry on a Sunday afternoon what the score of the Cleveland Browns game is. I couldn't care less. Again, I get my dopamine fix elsewhere. So God bless you if you do, number one. Number two, am I allowed to open a DraftKings account? Is it like on a per state basis? I don't know how that works.
Pennsylvania's kosher.
Pennsylvania's kosher. All right.
Yeah.
Well, I guess I will do it just for fun. Just for fun, I will. I might even already have a DraftKings account. I'm not going to lie, because I think I bet on the Super Bowl a year or two ago.
Yeah. Well, so speaking of which, let's talk about that. I got a little bone to pick with Florida. It's supposed to be like the land of the free over here. They ought to practice what they preach. I can't even, because unlike you, I do enjoy gambling on sports and basically anything. I can't even gamble on sports, and I live in the state of Florida. What gives there?
Well, you just need to find a bookie, like the old-fashioned way, the way it's always been done.
I know. That's what I used to do. All right. Moving on.
There was a chart. I'm not going to pull it up now. I saw it last week of the sports betting handles by state, and New Jersey is just demolishing everybody.
Yeah, they're the ones that took Florida to court. Yeah.
So I guess we got that going. We got diners, malls, and sports betting. All right.
Casinos are hot. Vegas is hot. This whole space is working. Like we were just talking about the consumer with Howard. He thinks it's like, a class thing, and maybe he's right. People with money can continue to spend it, right? And you see these high-end businesses or high-end consumer goods and services, just these stocks keep running. Casinos is a great example.
All right, it's 9:35. Sean McLaughlin, aka Chicago Sean, will be joining us in about 10 or so minutes from All Star Options. In the meantime, quickly, as far as the calendar for today, not a whole lot. We already had some things. We already had initial jobless claims. We already had the Philly Fed Manufacturing Index. We have existing home sales in a half hour. We have a few Fed speakers today if you care about such things. And if you're into macro events, the biggest thing obviously is just watching for the government to default or not default on their debt.
When is this raised? When are they raising the roof?
Can we?
When is that happening?
I
What
don't know.
day is that?
Today, I don't know.
Oh, is it today? Today's the day they raise the roof?
Any day. It could be any day, JC.
Oh, got it. Is there a deadline? You know how they usually have deadlines for these things? When is that?
Yeah, there is a deadline. Let me get it right
It's
now.
like August or July, right? So
Oh, we
I
got to deal
can't
with this
talk
shit
about
for the
this.
next 2 months?
No, you don't. No, don't worry. We're not going to talk about this.
I can't talk about this for another 2 months. I can't do it all summer. And I will say, go back to 2011. Okay, same thing. Everybody was scared about this debt ceiling crap, and they finally agreed and got it settled and increased the ceiling. And that was, I think, late August. Look what the market did after. Then the market tanked. The market was fine. They reached the deal, and then it sold off. So don't listen to these narratives. They're never right. People aren't going back and checking the price history and data that we have and can do. So this is really a nothing burger to me.
All right, June 1st. June 1st is when.
Oh,
they
all
need
right.
to-
That's
is
not too
when they
bad.
need
It's
to
only a
have
couple of
the-
weeks. By the way, I'm convinced that they're just running out of crises, the media, and they're just
Yeah.
like recycling old ones. In this case,
Yeah.
from like a decade ago, like the sequester is probably coming next and later this year, and the taper, right? All these other crises that we've had over the years. They're just recycling at this point. They're getting lazy.
Just print the money and pay your bills, and let's move on.
Yeah, I concur with all that. All right. Do we want
Spoken like a
to?
true American. Just print the money.
All right. Do we want to talk some tape here, Straza? Do you want to
let's do
rip
Yeah,
through
yeah.
some charts here? All right, let's talk some tape. I don't know where my video is, so I'm just going to pull up the graphic and
I think it's interesting that growth is outperforming. You got the NASDAQ outperforming today with rising interest rates. Granted, interest rates aren't ripping. They're up a little bit. But with bonds down and NASDAQ and growth up and outperforming, that stands out to me, at least early morning trading, no?
It's a growth on day. Again, what else is new? Growth up, value down.
Yeah, but with bonds down, though. With bonds making new multi-month lows, as a matter of fact.
We did this for the Investo Note yesterday. How long can this go on for?
But the divergence between bonds and tech?
Yeah, what are tech and growth stocks telling us about bonds, and how much longer can bonds not agree for?
Yeah, that's a big question. Like, so, are bonds going to catch up here? I'll share this. Spencer, if you want to pull this up.
Yeah, gun to your head, JC. We always talk about how the bond market is the smart money. Gun to your head, who's right here?
Well, let's take a look at this, see what it looks like real quick. I got it right here. Spencer, let's do a little sharing, a little screen share action.
Yeah, when we do this talking the tape thing too, I think we're going to start to show like a Koifin dashboard tomorrow so that we can
take a look at this chart. So this is what it looks like to me. Technology making new 52-week highs, by the way, on both an absolute and on a relative basis. And, we've seen that positive correlation with treasury bonds.
Yeah.
Technology, the mega cap tech stocks have essentially been the large cap tech stocks have essentially been a bond alternative, right? Is probably the best way to put that. A bond alternative. And is technology going to catch down to bonds? Are bonds going to catch up to technology, or have the correlations changed? That's my question. Straza?
I don't know, right? I think we continue to see more and more tech stocks and growth stocks, these long duration assets break out of these bases. But I need to see yields roll over and at least long-term treasuries catch higher at the very least. It's been going on all year now. You look at that chart, JC, the relationship was so tight when the market was selling off throughout 21 and 22. And then all of a sudden, this year, you got tech making higher highs and higher lows, and bonds are just dragging, making lower highs all year. So something's got to give. I don't know. I don't want to pick one. We'll let the.
Well, are you betting that throw the chart up one more time, Spencer? Are you betting that the correlations are now changing? Because as we know, in bull markets, in strong uptrends, correlations fall. And we've been seeing correlations falling among stocks, for 6, 7, 8 months, depending on, whether it's a rolling 21-day, rolling 63-day, whatever you're choosing. The shorter term you're looking at, the more correlations are rolling over. When volatility spikes in bear markets and downtrends, correlations all go to 1. So we're coming from that environment where correlations were at 1, and now with correlations coming down, can we expect that relationship between technology stocks and mega cap growth stocks and bonds is perhaps deteriorating? And maybe it doesn't necessarily have to be tech catching down or bonds catching up. Maybe just correlations are changing. Could that be the case?
Listen, it could always be. I don't want to jump the gun and bet against the correlation that's been so strong in recent history. For me, it's simpler, right? The market is forward looking. These tech stocks are simply discounting the fact that just look at Fed funds futures. Market's pricing in like 2-3 rate cuts by year end. So the market is pricing in lower rates, and tech stocks are not waiting for the Fed to make that decision and lower them. Tech stocks are running and pricing in those lower rates. You're not going to see it in TLT yet until they actually do come out and cut rates. Maybe it's just a timing thing. But I will say, if you are heavily invested in these tech stocks and buying these base breakouts, that is a risk, right? You do have to be careful if there is some sort of pivot here or change in expectations, and we don't get those cuts and rates stay elevated. I wonder if this strength can continue from tech. I would argue it doesn't.
Well, we need to see some rotation if this bull market is going to continue, and that's precisely the conversation we are having with Sean McLaughlin. Want to bring our boy in?
We got a nice spiffy intro for options with Sean. You ready for this?
Nice.
Let's see it.
All right.
That was
wow, handsome alert! Issue the handsome
alert.
alert.
That was
I
very
like it.
strong with the metal, like the heavy rock. That's Sean stuff.
I like it. We got a little echo. I don't know if you guys hear that.
I don't hear it.
Yeah,
I don't hear it
I
either.
think that's Sean's speakers.
I should have worn my green jacket. Sean's got his green on. Everybody's wearing green. Market's not up today, Sean. Maybe you should have worn red.
Your market might not be up, but the NASDAQ 100 futures are up 40 basis points. Some would argue that is not down.
Isn't it so nice that we can pick and choose what the market is when we talk about these things? So the NASDAQ is the market now for you?
The NASDAQ's not the market. Dow's flat. S&Ps are literally at 0.0% for the day, flat. The Dow's 24 basis points change. So both of those are flat. So yeah, I'll lean towards the one that's up tremendously. Yeah, and I would argue that the market's up.
Hey, I got a bone to pick. With Howard Lindzon. I hope he's still watching. Howard, I used to work for Howard for a long time. Love Howard, but for 15 years, Howard still mispronounces Chipotle. It's Chipotle, Howard. It's not Chipotle. Stop saying Chipotle. I hate it.
He also calls it NVIDIA instead of NVIDIA. And then he also calls it Toyota instead of Toyota. It's Toyota.
I mean, I want to blame the Canadian in him, but that's not a Canadian thing. So I don't know.
That's a Lindzon thing. No doubt. Okay. So let's talk about, there's still an echo. I'm still hearing an echo. I don't know where that echo is coming from. It only started when Sean came. Sean, you're ruining everything.
Sean, are your speakers on maybe?
Yeah, but if I turn my speakers off, then I can't hear you.
Yeah, well, we got to get Sean some headphones or something because it sounds like shit.
Sean needs some headphones. All right, I'll get Sean.
Sean, you're making us look bad.
A little bit.
We sound so good, and now you're making us look bad.
I'm going to take one from the chat while you guys bullshit. Paul, our NVIDIA target is all-time highs. We'll talk about it once we get there.
Ooh, is it?
Yeah.
Is it? Sean, we're talking about sector rotation. Spencer, if you want to bring up that industrial chart one more time that I was talking about in the old state of the markets, everybody thinks is a massive top and distribution, and they think that the market is going to completely collapse, and that's what they're looking at. I'm taking the other side, and Sean happens to agree. Now pull up the Caterpillar chart. This is one of the bellwethers of industrials, one of the largest components. This is a great way, in my opinion, to express a bullish thesis in industrials, and that rotation that I think is coming, perhaps has already started. Sean, what is it that you liked about this one? Why'd you let me put this trade on?
I don't like anything about it, just to chime in. Sorry.
Yeah, actually, I'm with Straza. I mean, I like this trade. I don't love this trade. And the reason why, and because I don't love it, I position myself very cautiously in a way that, I can't get hurt if I'm wrong. Too bad. I can't get hurt too bad. So we did it with straight long calls to find our risk.
Leave the Caterpillar chart up there, Spencer. Leave it up. Oh, there it is. Cool.
So
can we talk about what it is that you don't like about it?
Straza, you might remember JC when we were talking. He was like, let's sell some puts. Let's leverage into this thing. Let's do the old risky. JC's favorite trade. But I think Straza, you see what I see. Like, you look at that chart, it's like, man, if we're wrong on this thing, we're going to have a whoosh down 20 points perhaps. And I don't want to be holding short puts in something like that. So we compromised, and I said, all right, look, if this thing holds here, then it's probably going to be a great entry right here. But let's define our risks. Let's keep it tight, and we're playing it with long calls. And that to me feels like the best way to do it.
Isn't that like the beautiful thing about options? You can take our crazy ideas and shape them in a way that makes sense, might limit your risk in a way that makes it a better trade than just buying the equity. I wouldn't touch this thing. Here's what's going on though, right? So JC is simply betting on a continuation of the bullish rotation that we've seen all year, even late last year. Whenever growth has slowed down, value and cyclicals have picked it up, taken the baton, and vice versa, right? When I look at the charts now, and I'm looking at these short-term tops, I know you don't like it, JC, but I'm seeing these short-term tops and cyclicals and value, and I'm thinking maybe we don't get that rotation this time around, right? That's what the price action is telling me from these specific groups. You can look at growth and tech, and it's nothing but good things, right? When I look at the value in the cyclical groups, I don't like it. And that's why I worry about Caterpillar here. I think you don't want to ride this thing to the lower bounds of this range. So if you have a tight stop on it or you're managing your risk responsibly, fine. I don't hate the idea of banking on continued rotation, but I'm not seeing it yet.
By the way, one of the things that I like the most about this, yes, I believe that rotation is. I think that a good bet to make here is that rotation is coming. Obviously, none of us know if it's actually coming or not. One of the things I love about this trade is that let's say the rotation does not come in, and these are massive tops, well, we're going to know quickly. And I love knowing that I'm wrong quickly. Remember, I'm not here to be right. I'm only here to make money. I don't care about being right or wrong. I'm only here to make money. So if we're going to be wrong, I want to know quickly that we're wrong. I don't want to be sitting around waiting for months, right? So that's what I like about this long November 240 calls. I assumed incorrectly that because of the decline in Caterpillar's price, volatility would be elevated enough where it would make sense to sell the downside puts to pay for those calls. Sean quickly corrected me, pointed to implied volatility not being elevated at all, not worth selling those puts. Just shut up and buy the calls. How did I do there, Sean?
I think you nailed it, bud. I'm glad I was able to protect you from yourself. I think we're all winners in that. Hey, little breaking news here for anyone who I know we've got All-Star Options subscribers watching this. We just covered our EEM short strangle. Just got filled seconds ago at our profit target. So if you're in that trade, time to get out.
Sean, can we get back in DraftKings?
Yes.
Can we get back in it? Listen, there's nothing wrong with that. I do it all the time.
There is nothing wrong with that. In fact, I did that with what's the Bitcoin play, MicroStrategy, and that worked out really well. But I don't hate DraftKings. I want to see it get back above 2450 before I get interested again.
Ooh, 2450. That's very aggressive. All right. We'll fix Sean's audio for next time. Sean, you're making us look bad, bro.
No, I'm making you look great. I'm making you sound bad.
Dude, I love how Aaron Rodgers is wearing his green T-shirt, like just to really confuse people here. I see what you did there, Sean.
J-E-T-S, suck. Go
last thing before Sean goes. I know the pay-to-play portfolio is doing pretty nice. You want to talk about that for 2 seconds?
Yeah, we can talk about it real quick. We recaptured new all-time highs this week, which is great. The crazy thing here is this chart right here encapsulates exactly what is so hard about being a premium seller, right? Like, selling premium is easy. Being a premium seller is hard. And chart encapsulates it perfectly. You see that drop in March there. That was, that was no fun for anybody. That was driven by the KRE, TLT blowups that was going on with Silicon Valley. We were short some strangles there. And it hurt, and that happens. That's not a bug. That's a feature of premium selling. The reason why we get paid to be premium sellers is so that we can absorb risks that happen in times like this. And you know what kept us in the game, and what always keeps us in the game, is that throughout that whole process, we were keeping our position sizes small, keeping it conservative. And hey, it paid off. Persistence paid, and we're back at all-time highs. I'm feeling pretty good about it.
I'm feeling pretty good about it, considering this is my personal portfolio, and so I'm feeling pretty good about it. I must say, there, Shawnee baby.
Yeah, I'll be sending you an invoice for my performance fee pretty soon.
All right. Take your options game to the next level. Sean McLaughlin.
Oh, look at that
All-Star
horrible
options.
picture of me. We got to update that graphic.
Sean has a free daily options email. In order to get this email, you can just scan the QR code on the screen, use the link in the description of this video, and get your get our free daily options email. Sean McLaughlin, thank you so much for joining us today, and good luck out there.
Take care, boys.
All right.
Adios.
All right.
Is it time for recess yet?
Yeah. Actually, it's 9:52. I was about to say we've got about 8 minutes left in the day, so I know I have a topic for recess, and I know we have some messages in the chat. I'm keeping an eye on the chat throughout the day, and if I see anything that's super pressing, obviously we address the chat. But I do like the idea of just sort of allocating the last 10 minutes of the show or last 5 minutes of the show for chat stuff. So if you have any questions, please drop them in the chat on YouTube, and we'll do our best to answer them. But let's go to recess right now, because I've got a thing, and I know Straza has a thing too. All right, what do you got?
What do you guys?
You want me to go?
Yeah.
Okay. So this is fun. Every so often, like, crazy stuff happens after hours, right? And we had some crazy things happening yesterday after hours in CDW, which is an otherwise boring stock, right? Not super eventful. I don't think we've ever talked about them for news purposes, but anyway, yesterday CDW closed at 4 p.m. Eastern time at $173. Okay. I don't have a chart up, but that trust me, that's the closing price. 173. In the after hour session, at the beginning of the after hour session, the opening candle at 4 o'clock in the same minute, stock opened at $6. So to recap, closed at 173, after hours starts trading at $6. Obviously, that makes no sense whatsoever. So this morning, the New York Stock Exchange came in and they busted every single trade between 4 o'clock and 4:20 p.m. So if you are that person that thought you bought CDW for $6 and sold it minutes later for 173, sorry, you didn't. I mean, you did, but New York Stock Exchange says you didn't.
What happened? What ended up? Why did it do that?
I have no idea.
How could that happen? Like, a market maker is really screwing up in that situation, and I would imagine they get in trouble for that.
Someone's getting in trouble here. What's the volume on this candle? 11,000 shares. We'll call it 12,000. 12,000 shares traded in that first 15 20 minutes after the close.
That's, I mean, it's nothing, but it's still too many. That's crazy.
Right.
It's not like one fat finger. Yeah. Wow.
Right. So that was my recess. CDW has a funky after hours chart. No, it did not trade at $6. I mean, it did, but
these things continue to happen. We had that issue at the exchange a couple months ago. Whatever happened, right? We had all those false candles. They finally cleaned them up and fixed the data. The entire financial industry is using antiquated technology, old systems. Everything is centralized. Nothing is decentralized. they got to fix this. We talk about things like how settlement still takes 2 days or however long it takes. It's just not a very efficient, infrastructure that we're operating on anymore. So I don't know if blockchain helps this in the future or what, but this stuff seems to happen too often. And then, the exchanges are out here, the brokers are out here taking losses for it. I think we could do better with the technology that we apparently have today.
That was my recess.
Yeah.
Well, here we are, and it is May, right? Spring is in the air. It's getting a little warmer up here in the Northeast. I think it's a great time for everybody to be drinking a Sicilian wine called Frappato. Frappato, it's going to be a very light-bodied red wine. You could serve it slightly chilled. Goes with a lot of things. If you're eating, pork or chicken or salads, maybe you don't want that white wine. You want something red, but you're not going to be drinking a Barolo at noon. You'll be dead by sundown, right? So Frappato, highly encourage it. From Sicily, a nice producer that I recommend is Ariana Ocipinti. They make a nice Frappato. Get involved. It's not going to set you back too much. I think it's I don't think people are drinking it enough. And this is the time of the year where you probably want to be drinking some Frappato. So shout out, Sicily.
Do I want to ask how to spell that? I don't even.
Frappato. Frappato. Frappato.
All right. Do they teach you how to pronounce these things too in wine school?
Well, you need to learn how to pronounce them. Otherwise, it's going to be harder to remember, especially like the German stuff, like Trockenbier and Auslese. Like if you don't know how to pronounce it and spell it, you're never going to remember Trockenbier and Auslese, for example. Frappato's easier. The German stuff is crazy.
Do you like fancy beers too, or just fancy wines?
Nah, the beers I feel bloated. Yeah. I like the wines. And by the way, wines don't have to be fancy. Frappato's not that fancy, for the record. But it's perfect for this time of the year.
But some of those European beers are heavy. They're nice. They're like, almost like a wine. You could eat some meat and cheese with them, and it's fantastic. They do that.
A lot of people like beer. It's not, I'll have a beer or two or whatever. I'd rather drink a glass of wine. Give me the Frappato over your beer any day.
All right, so I got 2 minutes. PGA Championship starts today. I think it's the second major tournament of the year. We got John Rahm teeing off just a little bit here. I love having sports during the week and during the day. I find it difficult to listen to music or have too much background stuff going on while I'm working. But throwing on a golf round and just letting that play in the background is lovely. So I'm excited about it. I get excited about all the major tournaments. Again, thanks to Florida, still can't bet on it, but hopefully we'll figure that out soon. Are you guys going to be watching the PGA Championship?
I didn't know it was going on until you mentioned it earlier.
Yeah, I watched the Heat game. You can't watch a little golf for me?
Watch the Heat game. What does that have to do with me watching golf? I'm not going to watch golf. I don't have a TV in my office. Thank God. It's better for the sanity. I'm more of a music guy.
Me watching the Heat has nothing to do with you either, dude. If they go to the finals, I'm going.
You should. Shout out Jimmy Butler, man, stepping up. Playoff Jimmy is no joke. No joke.
I went to school at the same time as Jimmy Butler. We're around the same age, and he played for Marquette, and that was back there in the Big East days. So UConn used to battle it out with Marquette like 2 or 3 times a year, and we used to hate playing them because Butler was just he was awesome even back then. So.
Shout out Jesuit schools, right? Little Jesuit school action there, Marquette.
Yeah, you're right. Yeah.
I like it.
All right, we've come to the end of our show. If you liked us, if you thought we had some good thoughts today, if you had fun, then do us a favor, drop us a like on YouTube. If you're watching on Twitter, then just hop on over to YouTube and hit that thumbs up. We appreciate that. Always subscribe to our channel. Get notified of when we go live, when we post new shows. Thanks to our guest today. Thanks to Options Sean McLaughlin. Thanks to Kim Sokolov. And thanks, of course, to Howard Lindzon. He's Steve Straza. He's JC Peretz. I'm Spencer Israel. And again, links are in the description. Everything we talked about today, all the free stuff that we have, the Hot Corner, the Daily Options email, the chart report, all those links are in the description of this video, so check it out. And we'll be back tomorrow morning. Same time tomorrow is a thing that people say, I guess. And that's a wrap. Any final thoughts?
Same time tomorrow, knuckleheads.
That's a thing.